Lakes Country Service Cooperative with their provider, Blue Cross Blue Shield. For those of you that may or may not know, I'll just go through it real quickly. This process this spring was different. The first time we had to go through sending out bids to acquire bids for our health insurance. We've done that. We send out RFPs. They've come back. We had 3 bids come in. Today we're going to have the service cooperative with Blue Cross Blue Shield. Next Wednesday, a second provider is going to present to you, same place, same time. That will be PEEP. Looking at what we have and visiting with FEA too, it seems to us that these two are the two that we're going to have to pay some close attention to, ask a lot of questions, reflect back on the video, and to Doug and Jerry and Amy, whatever you need to. But today is an opportunity to ask a lot of questions, and hopefully we can get some answers to those questions. Anything else? They are going to speak to you as teachers from that perspective. So, the email was sent out from Doug inviting teachers, and so their numbers and their presentation is based on that reflection. So, some of this, if a paraprofessional or some other was to ask you a question, it might be slightly different. So don't get caught in that's not what you said. They're going to speak to you from the teacher vantage point. Anything else you want me to do for you ladies?
No, I don't think so.
Thank you.
Thank you. So anyway, I'm Jill Bartlett, and I'm with Lakes Country Service Cooperative, and Deanne.
I'm from Blue Cross.
We want to make this time a valuable time, use of your time. So we want to be able to answer your questions. Probably, the current plan designs that you have that are offered here are similar plans that you've had for quite a few years. I don't know that we need to spend a lot of time going through each plan design unless you have specific questions. So maybe we could just start opening up with just trying to address some of your questions, and then also there is one of our spreadsheets that we'd really like to spend some time with that compares our premiums versus what your contribution is versus what the plan design offers. So that's one of our key things we would like to have some time to cover with you as well. But just starting off, do you have specific questions that Dan or I could address? And that's fine too. I'm sure some will come up. So.
Yep. We will just dive in. Trust me, we have plenty to present. I asked Terry how long you guys were willing to stay. Just kidding. So in your packet, the first section, the stapled section, are all of your current plan options. Okay, so you currently offer a $500 deductible plan, a $1,200 deductible plan, a $3,200 deductible plan, and a $6,000 deductible plan. As Jill said, these plans have been in place for some time. The minimum value plan, the $6,000 deductible plan, is fairly new. So, are there questions specific to your current plan designs that you would need clarified, addressed, would like us to review? Would it be helpful to walk through each one during this time? Like Jill said, we want to be helpful, so if you have questions, okay. Well then, I'm honestly, then I'm not going to walk through these because we're going to kind of talk about them as we look at the spreadsheet, which is where we kind of want to spend most of our time, okay? But please ask if you have questions.
So the spreadsheet that Deanne's referring to is almost to the second to the last item in your the bigger packet, the one that isn't pink.
Yep.
So I think that's where we could kind of start and walk through this.
Yeah. So what I tried to do is put together a spreadsheet that really shows the financial end of picking a plan. Many of us are guilty of picking a plan, how it's labeled or defined. We've talked about that in the past, how some choose the $500 plan over the $1,200 plan just because it's a lower deductible. But what you want to do is look at your entire risk, your exposure as a member versus on each plan, on plan design, okay? So what the plan, what it shows is the monthly premium that we presented in the proposal. So these are rates effective July 1 for each of the current plan options. And we'll start with the 570/30. So the proposal rated out at a 15% increase. Do you want to give just a quick synopsis on the?
Right, the way the rating was done this year, and again with the whole new legislation with this bidding process, the HITA process, which stands HITA, which stands for the Health Insurance Transparency Act. It just kind of basically changed the whole way Lakes Country Pool needs to manage the health plans. So this year what happened was we still have pooling. It's just probably just not the same kind of pooling as what we've done in past years. So what I mean by pooling is that we did have, we got an overall increase for the whole pool, and then what we do is we look at what each school district needed on their own, either if they needed an increase, or in a lot of cases, or some cases, districts needed a decrease based on what their own utilization was. So then what we did is we looked at how could we still have a pool where we could have the pool help the people or the districts that are on the high-end utilization risk area. So what we did is we had rates that went that some districts got negative decreases, and they were still getting, they're still helping with the pool. And then we had some groups that got 45% increases, and even with a 45% increase, they're still getting a lot of help in the pool because their needed was much higher than that. Then we have the ones that are kind of that fell in the middle. And some of those also got some help, but they were more likely to get what they kind of needed with their own claims utilization. So there still is pooling, and there still is some of it, maybe less than what we used to have when everybody got the same increase no matter where their utilization fell.
So just to recap that, so our role at Blue Cross is we actually put the renewal together and present Lakes Country Service Cooperative with a calculated amount. So had you been fully insured with Blue Cross in that market, you would have calculated at a 28.4% increase. So we shot that over to the service cooperative, that they applied the pooling process, bringing that down to 15%. Okay, so back to the spreadsheet. So when picking a plan design, you definitely want to focus on the whole picture, and a big part of that picture is premium, okay? Premium and risk. So the spreadsheet shows premium less employer contribution, and as the superintendent said, we used the numbers based on the teacher's contract. So if any of you in here are not teachers, that employer contribution may be a bit different for you. And if you are interested, I can send this spreadsheet to one of the girls in the office, and you can plug in what your employer contribution is, and the formulas will calculate the rest of it for you. So if you are on the 570/30 single plan for the upcoming plan year, your annual cost is $2,293.20. We call that best case scenario. That means if you're healthy and you never go to the doctor, you're very fortunate, you don't even need a prescription throughout the year. Hopefully you've gone in and had your preventive care exam and that's paid at 100%. That's what this plan's going to cost you, is $2,293.20. Now what's your exposure? So your exposure is $500 of deductible. So that's your upfront cost. So when you go in for an office exam, if it's $100, that first $100 is going to go towards your deductible. Now after you meet your deductible, then the plan pays 70% and you pay 30%. That 30% is called coinsurance. So you have an additional $1,300 of exposure for coinsurance. So your total medical exposure on this plan is $1,800. Prescription drugs are completely separate. You pay $15 or 25%?
25%.
25%, whichever is greater. That goes towards a separate prescription drug out-of-pocket maximum. So if you end up paying $500 for prescriptions, then your prescriptions start paying at 100%. Okay, so your best case scenario is premium only. Worst case scenario, let's say you have a baby. Most of the time with an inpatient stay, having a baby, I hate to call it worst case scenario because it's a celebration, but as far as the plan goes, the most you would pay out of pocket is the $4,593.20, premium plus member exposure. Okay? Do we have families here today? Any family coverages? Oh, okay, okay. So families, same thing. Premium, less employer contribution. It shows you the cost annually and then your risk. And on the family plan, it's $1,000 single or family deductible. If any one person in your family meets the individual deductible of $500, then their services start paying at 70%. We call that an embedded deductible within the family coverage. If the family meets their family deductible, then they have an additional $2,600 of coinsurance. So the medical exposure on the family plan is $3,600 for medical and another $1,500 for prescription drugs. Couple things I want to point out. This plan has fourth quarter carryover. Honestly, we are the only carrier in Minnesota that offers fourth quarter carryover. I'm honestly not aware of any other carrier that provides that benefit. It is a unique benefit, but of course with it comes value and cost. What does that benefit do for members? What it means is deductibles run January to January, okay? But your plans renew July 1. So come January 1, if you haven't met your deductible yet and you incur expenses in the fourth quarter, so October, November, and December, we apply deductible to those claims. We will carry that over and apply it to the 2016 deductible. So you actually get credit for it twice, okay? If you are a person that has met your deductible by the third month of the year, fourth quarter carryover won't even apply to you because it's deductible only. But if you're that person that's pretty healthy all year long and then come November you end up going in for an office visit and $120 is applied to your deductible for 2015, we're also going to apply $120 towards your 2016 deductible.
And the fourth quarter carryover is deductible only, no
Yep.
co-insurance and no prescription drugs.
Yep. Now, if you said to me, Deanne, but I want the premium on this plan to be less, we can do that by removing or stripping out benefits. And that would be one of the benefits that we could look at removing. You know, it depends upon how employees value that benefit. The other thing on the plan is it has our Aware Network. Our Aware Network is the largest network in Minnesota that we sell, so it's 100% of all providers and 99.6% of hospitals, 100% of all hospitals, 99.6% of all other providers. So rarely will you run into an out-of-network provider in Minnesota. Where might you? Anyone that's gone independent. Fargo-Moorhead, if we see someone new that isn't part of the big care systems, that's typically a question I'll ask them, is do you participate? Because I want to make sure that I'm getting the best coverage that I can using an in-network provider. It's open access, means you can go wherever you want. You don't need a referral. A lot of times providers will say, do you need a referral? On open access plans, you do not. And that network does include mail, which is typically a question that comes up. Does it include mail? Yes, it does. So that's the 500, 70, 30.
Do you want me to do this one?
You want to do the
Okay.
1200?
Yeah,
Okay.
let your voice rest a little bit. Okay, on the 1200, this one is, we've laid it out the same way. So this one, you have your total premium on what we presented in the bid process. for the single and family rates on the $1,200 CMM plan. CMM is Comprehensive Major Medical, is what it stands for. So on this one, again, we use the teacher union contract. So here you can see that the premium cost for each employee on this single plan would be $186.60 per month. On the family, it would be $854.58. So your annual, you can see your annual premium cost there for each of them, the $2,239.20, and family would be $10,254.96. Now on this plan runs that it's deductible and prescription drug and everything else at 100%. We call it a 100% plan. So your maximum liability for a single coverage on this plan is $1,200. And again, this is where you use the plan and you have a prescription drug to be filled. You go in and you fill that prescription drug. If that prescription drug is a $100 drug, you don't have the copay like you do on that prior plan, the $570.30. But whatever the cost of that drug is, it goes towards this deductible. So your maximum liability on this plan is $1,200 for single, $2,400 for family. And I just want to kind of point this out here because on this plan, even though it has a higher deductible, the maximum liability for plan cost, not premium, but just plan risk, is $1,200 versus a single on the $570.30 plan is $2,300. So just kind of keep that in mind. It's quite different. It's a higher deductible, but it's less risk overall.
So if you're gonna have a baby, make sure you switch to the $1,200 plan because it's gonna cost you less in a worst case. I mean, a good situation.
This plan also has the Aware Network. So again, it's most all providers in Minnesota and Blue Cross affiliates elsewhere. And it also has a fourth quarter carryover. So now you can see on the bottom line here, you can see what your overall exposure is for everything compared to the $570.30. You can see it's less, even though it's a higher deductible, and it goes from, on the family, it goes from $15,570 to $12,674. Again, that's worst case scenario. All right, then what Blue Cross did was in the bid process, they put together a lean plan for you. So let me talk about that.
So basically what I did is I took your $1,200 plan and I stripped out some of the benefits. Because I wanted you to see, well, again, I knew that our competitors wouldn't quote fourth quarter carryover, so I wanted you to see a more like comparison to something that a competitor would present. So on the $1,200 plan, and there is a benefit summary in your handout, I highlighted them as lean option. And then I also highlighted, oh, I guess that didn't show up. So there's 3 changes on the $1,200, oh, I'm looking at the wrong one, did. On the $1,200 plan, oh, this one has $232. Do you guys have the $1,200? In this packet, is there my packet has 2 of the same, unfortunately.
Oh, that's our office, we messed up.
Okay,
We'll just have to talk through it.
trust me, this is what it says.
We'll get it to you. Sorry.
So on the $1,200 plan, we have removed the fourth quarter carryover, okay? We changed the drug formulary. So on your current plan option, you have our largest drug formulary, which is FlexRx, which has brand name and generics in every category. On the lean option of the $1,200, we've switched it to our more cost-effective formulary, which is GenRx, which is a lot more comparable to our competitors. So FlexRx is a much more generous formulary, so to speak, okay? So the lean option has the GenRx, your current plan has FlexRx. So we've got 2 changes so far. And then the last change, there's one more, right? Oh, we removed bariatric and infertility. A lot of our competitors don't include those benefits in their plan options. So what the lean shows you is a leaner plan that does not have fourth quarter carryover, does not include bariatric or infertility, and has a different FlexRx, or formulary. Different formulary, not the FlexRx.
On the one that you gave out to everyone for the lean option, does everyone have that?
1,200?
Because mine is 32 and 32.
Yeah. Yeah.
We put the wrong one in there, so it's the same stripped out versions that we show in the 3200. I didn't put the right plan grid in there. That was our office error.
Some of them have.
Some of them do?
Oh, some of them do, okay. Do you want to maybe fish through a few, Chrissy, for us? Okay. So that's the lean version of the 1,200.
So questions on, yes?
How do you know if, I mean, I don't understand the difference in FlexRx and
Oh.
GenRx.
So our GenRx basically has way more generics versus brand name drugs, okay? So one thing about both lists is they're created by a panel of pharmacists and physicians. So there is a medication to treat every condition. You're just gonna have access to way more generics, or access to way more brand name drugs is a better explanation on FlexRx. Okay, so way more brand name drugs on FlexRx versus GenRx.
The GenRx is driving people to use the lower cost drugs
Yeah.
more frequently.
Yeah.
Okay. Then, the 3200, should we jump into that one?
Sure.
Okay, so then we get to the 3200, which you have currently right now. This is the plan that can be also attached to a health savings account. I don't know that we're going to spend a lot of time on the advantages of an HSA, but there are huge advantages, and I think most of you that probably do put money into an HSA realize that it's dollars that can go in tax-free and come out tax-free for eligible medical expenses.
How many do use an
Yeah.
HSA?
Okay.
Okay.
That's great, because there's so many tax advantages there that it's incredible. So here again, we go with what we have on this plan. It's a 3200, we call it a 100% plan. This one shows the premium again for single at $505.50 and the family at $1280. Then we take away the district's contribution, what they contribute each month towards that premium. And so you can see what the member or your employee total cost is $64.10 on single and $566.08 on family. Now on this one, you have your single deductible on this plan is a $3,200. It's another 100% plan. So it's $3,200, and again, it includes both medical and prescription drug. This one, $3,200 single and $6,400 family. So on this plan, this one also has the Aware Network. This one does not have fourth quarter carryover. This has been taken out of this plan for that purpose. And then you can see what your worst case scenario is on a plan like this, is if you meet your single or family deductible, you can see that your final cost for single with the premium you would have to pay on your own plus the deductible of $3,969.20, and on a family the $9,730.96. So there's your total exposure throughout a calendar year.
And for the families, I just kind of want to explain how I came up with that $9,730.96. If I used the $1,200 plan as an example because of the amount of families on that plan, I show the contract count on the top there. So if you're one of the families on the $1,200 plan, your cost is $854.58 a month. If you were to consider looking at the 3,200, you can see that your cost would go down to $566.08 a month. I took that difference times 12. What that $3,462 is, that's your premium savings. Now you can do one of two things with that. You can take it in payroll, taxed, okay? Or you can move it tax-free into your HSA, that's where those tax benefits come in, and use it to help offset your medical expenses, which is probably a better bang for your buck type of thing. So really your risk on the 3,200 family is the 13,192, but if you take your savings from the premium and you apply it towards that risk, that's where I get the 9,730.96. So that's a choice. That's a choice on your part whether whether your family wants to do that or not. And that's where education on the HSA and that concept comes in.
So questions on that? Okay.
So we made a lean version of the 3,200. Basically same thing. So we took your 3,200. It already didn't have fourth quarter carryover, so that stays the same. We removed infertility coverage, we removed bariatric coverage, and we changed the formulary to Generex. So those are the changes on the lean version.
And again, that would still be eligible to have an HSA attached to it. It's a qualified, high deductible health plan.
Now, one thing nice about being in the service cooperative is we can tweak these plans however you want. You have the flexibility as a group to say, we want to make this change. And I rate it out for you and let you know what that savings would be or what that additional cost would be based on that change.
So I think before we go to the next one, I think we'll jump to the far right one, which is also one of your current plans. And this is the $6,000, what we call a minimum value plan, which is HSA compliant as well. And this plan came about more so since federal health care reform, and it's a plan to help districts meet the actuarial value of having an affordable plan with the penalties coming out. That this should, in most cases, allow the district with what they contribute towards the plan to allow them to not have to pay penalties by offering this high deductible health plan, which we call minimum value. And so by the district offering it, they can do all their calculations for healthcare reform based on this plan, even if they only have a couple people on it, because they have offered it and it's an affordable plan based on healthcare reform standards. So on this plan, we do have 10 contracts on it. You can see what the premium is going to be for single and family, and then you can also see the employer contribution. We had that wrong. Okay, I didn't.
No, it pays the premium in full.
Okay. All right, that's right. Okay, so
Yep.
it pays a premium in full.
Yep.
You do have the $6,000. This is a 100% plan. So it's $6,000 deductible, 100%. It has combined medical and prescription drug. It has the Aware network, so it's got the full network. It does not have fourth quarter carryover. And this one has GenRx, prescription drug coverage, not the FlexRx, so it's more limited.
And it does not include coverage for infertility or
Or
bariatric.
bariatrics, that's
Yep.
right. Okay.
Yep.
So that's a current plan that you have, and you did have in place last year.
So, ironically, there were some families that, to save premium, to save cost up front, chose to take on the additional risk. Because you do have a significant amount of risk. And for families, statistics show that in families, typically one member will meet their out-of-pocket maximum, but it's rare for the entire family. Now, that is different by scenario, because a lot of us are close to the empty nester stage, and we both might meet the out-of-pocket maximum. But I think that study was focused more on families with young dependents. But again, the strategy here would be take part of that premium savings. I mean, that's $6,882 of savings in premium. That's enough to cover one deductible. So not a bad strategy, especially for a healthy family.
So with what we've presented here, we've presented your 4 current options, which those are plans that you can continue to stay on. They're really exactly as your plans are right now. There's no change in benefits, no change in what you would need to access for a network provider, no change for prescription drugs. It's basically the only change we're bringing forward is obviously the increase in premium. So, I mean, there would be no reduction of aggregate value in these plans that you currently have. But you, as a district, have got the options to look at different plans, if you so choose to, even within the service cooperative with Blue Cross.
So last year, I presented a Blue Connect plan option, and we did put that in the proposal again. So just kind of a little refresher on Blue Connect. It is an example of what we would call a narrow network at Blue Cross. Popular in the market now, besides the consumer-directed health plans with the health savings account attached, is the drive towards a more narrower network to generate some cost savings. So we actually, at Blue Cross, have an arrangement with Sanford Health. It's called a Blue Connect product. I won't go in great depth because we really talked about it thoroughly last year. I know that it wasn't of interest at that time, and that's absolutely fine. I just wanted to bring it back to the table. So what I did is I took your $3,200 plan option. So same risk, $3,200 single, $6,400 family. Does not include fourth quarter carryover, has the FlexRx formulary. And I added the Sanford Health Network to it, okay? A couple of handouts for you to reference as far as the network goes. This blue sheet, on one side, it shows a snippet of the hospitals that are considered in-network on Blue Connect, okay? And then on this gray sheet, it shows some of the newer changes to the network that we're adding January 1. This is a fairly new product. It started January of 2014. So we continue to build the network as we move along. Probably the biggest question I get is Mayo Clinic in the network? No. Okay, so how this strategy has worked at some of our groups, and we've actually had a good handful of groups put in a Blue Connect product. It's not recommended to be a total replacement. We would never come into a group and say, we are only going to offer plans with Blue Connect, because that would be unfair and would not meet everyone's needs. But we do see it as a possible solution where you add it to one plan, because if you have a family or an employee that uses the providers in network, there's definite savings. And there's also some very unique benefits in Blue Connect that are not available in most other plan options. For example, it has a chronic condition management benefit, so it focuses on two big drivers of medical conditions, and those are diabetes and high blood pressure. So if you are being treated for diabetes and high blood pressure on this plan option, the x-rays and labs that are defined as evidence-based, and we actually have a list of them included, are paid at 100%. Because we want to make sure that we keep the diabetics healthy, and those with high blood pressure, we want to make sure that that stays at a good level so it doesn't turn into something more catastrophic. And then on the back side of the benefit summary, it shows you a preventive RX benefit. So medications for diabetes, high blood pressure, and cholesterol lowering are paid at 100%, no deductible. And there is an actual list in your packet that shows you all of the medications that are paid at 100%.
With the Blue Connect product, what we say is that when we mirror it off of one of the other plans, so in this case the 3,200, we say it's an approximately a 10% reduction in the premium between the two plans, because it has the narrow network, and that's, you know, anytime you limit the network of where you can go and different types of the plan, it's going to change the premium itself. The other thing that I just would like to explain too is that through the co-op, you are still able to have 4 plan options. And because this minimum value plan is considered, it's kind of considered a freebie, because it's a plan that a lot of our districts need to offer because of the federal healthcare reform. You are you can actually offer another plan than what you currently offer now if you so choose to do that. Because you have the 570/30, the 1200, the 32 HSA, and the 6,000. So you could, for example, add a 3200 Blue Connect product. Maybe it's a good fit for some of those people that go to Sanford anyway. Or you could offer a 3200 lean plus your current 3200. And also the same for the 1200. You're able to do that and have up to the 4 plan options with the 6,000 being, doesn't really count as a 4. So now we'll let you ask questions.
Come on, stump us.
This is your time to.
We could be stumped, it's been a
Oh,
long day.
yeah. Definitely could be.
I did ask permission from the superintendent. We also have another limited network that we sell at Blue Cross. We didn't present it in the proposal, but I asked him if I could share it with you. It's kind of like Blue Connect. It's called the Group Value Network, and there are handouts in the packet. This pink one here. And so you'll see that it is a tiered network. There's in and out. Again, Sanford is in network. Essentia is not in network. But what I found are some of the other professionals, like the chiropractors, the physical therapists, maybe the vision providers. There were more in the Group Value Network in this area than there were in Blue Connect. And I actually put together a little handout. I looked at your top 10 providers used in 2014. And I show you which N means no, they are not in network. Y means yes, they are in network. So if you are interested in a narrow network plan design, we have the 2 networks as a possible solution. And I did also rate out a plan. I took your 3200 plan option again, same plan, and I added the Group Value Network, and this separate handout shows you what that would rate out to be in comparison to Blue Connect. And there isn't as much savings with Group Value as there is with Blue Connect. And the reason that is because Blue Connect is actually what we call an affordable care organization. So we have a very unique arrangement with Stanford Health that has allowed us to really, really negotiate some nice discounts on services. So that's why there's a greater savings with Blue Connect. So we have several narrow network options that we can discuss and present if you're interested. Okay, still no questions?
It's just the baffling to hear processing all the numbers. It's not that, this is great information. I didn't let it soak in.
Sure.
Oh, I agree. It's a lot of information. And I guess we'll ask you, because, we've had the opportunity to present to your district many times over the years. Is that spreadsheet helpful?
Yes.
Does that kind of help?
Comparison with all the numbers.
You know-
You guys stare at the numbers, but it's helpful to look
Yeah,
across.
it's kind of an
Yeah.
overwhelming spreadsheet, but I think if you, yeah.
We think what people really have a hard time getting their arms around is, what is your maximum liability for the medical and prescription drugs, and then also what you have to pay yourself on the premiums. And I think that's where we've kind of captured this information based on your current negotiated contract and what the rates will be. So again, it kind of like the answer that shows the best case scenario if it's just your premium, or worst case scenario if you meet that maximum liability.
So my question is, once again, you're gonna offer 4 and then that freebie one?
You can't, yes.
Yeah. Yeah.
So just to point out, and I think I asked you this earlier, you presented in the bids certain plans, but if we would choose Lake Country, the Blue Cross Blue Shield, we could look at other plans. Is
Yes.
that correct?
Yep.
Yep.
Yep,
Okay.
once you've chosen your carrier, you can look at whatever plan options you're interested in pursuing.
Okay.
Is there a certain number of people that have to be enrolled in order for the district to offer that type of plan?
You know, I would prefer that we have at least one,
Yeah.
you know what I mean?
Yeah, right. right.
We're
But
very
there's-
flexible. It's one of the agreements we have with the service cooperative is flexibility. In our fully insured market, I would say no, we need to have 10. But I will set up an option if you can guarantee me that I have an enrollee.
You know, I'm gonna take that a step further, because also, the more plans that are offered at the district, the more work there is at administration to monitor all those plans and the premiums and contribution. So I would probably ask that question back to the administration. How many plans do you want to administer? You know, I mean, I think it comes to that as a,
We can have more than 4?
no,
Those are what
not,
happens, you know, now.
yeah,
You can have 4 plus the value.
you could, yeah,
4 plus 4.
Yeah.
Yeah.
Yeah, we consider the minimum value plan a freebie because of
Yeah.
the requirements coming out of the Affordable Care Act.
When you were just referring, just to clarify, when you were talking about that 15% increase, you were talking about, like, so our out-of-pocket would be like 15% out of times what our premium is right now?
No, the
Because what you have
50%
on here-
is your rates from last year to this year went up 15%.
Okay,
It doesn't impact the plan, but it impacts the premium.
so
That
then you
50
won't be paid, that's what I'm,
Well, yeah, I mean, if you're on a family, yeah, it could
or
impact,
even
yeah,
single,
yeah.
yeah, any of them, so
Yeah,
it'd be 15%.
you're right. If the premium goes up and if the contribution stays the same, then yes.
So what you're showing right here is the current, what we have on here is the
No,
current.
what I'm showing is what we proposed in the proposal.
So
That
this
is what it's going up to.
That would be what it's going up to?
Yes.
yes, this is for
Yeah.
July 1.
Yep,
Okay,
yep, good question.
So
This
just
would
to
be our
clarify.
new rates,
These are the new rates.
Yes.
Okay.
with our dollar amounts. And
Yeah,
Saying
well,
that the district doesn't put
the
anything
employer
like that.
contribution
Right.
that's
Yeah,
reflected
right.
there is for teachers.
Yep.
yeah,
So,
And it's the current.
right. this-
Right.
That's what
It's
you're
not what we're
referencing.
gonna be negotiating, this is our current.
I imagine you'll be bringing that up, yeah.
So this is, yeah.
So the current rates, what they
15%.
currently are on the books.
Right here, currently, with
Yeah,
the increase on
premiums
there.
are the new ones,
Yep,
so now negotiations start.
yeah.
So what we're seeing right here is not what's currently taken out, this is what the future would be.
Correct.
yes,
with nothing from it.
if your
Got it,
contract stays the same.
okay.
Yeah, yeah. Good clarification.
But anyway, thank you for sharing feedback on this, because I
Yeah,
think
it
this
is good to know if it's helpful
Yeah.
or not.
Keep doing this.
Okay. Good.
I actually put it together for my own family because I couldn't decide what plan option to take at Blue Cross when I first started. And family of 5, it was all about the money for me. This is how I made my decision. Yeah,
But I can see this being a personal choice. If you're the type of person that's not good about putting away $200 a month for that health savings, then you almost want to go with something where they take it out for you and just take care of you. I mean, there's kind of that.
yeah,
That's absolutely
that's
right,
right.
yeah.
Our intent is to hopefully have options that fit everyone's needs because everyone's different.
Okay, well, we'll be here for a little bit if you have any other questions, but thank you.
Thank you.
Thanks for coming.
Good job laying it out.
Oh,
Okay, good.
thank you.
Well, you're one of our first districts.
For member education?
Yeah,
Wow.
I think it is.
I don't remember.
Yeah, I don't think we, I think, you know, with the
Trying
HIDA
to stay
process,
ahead of it so we don't come up against the last.
yeah.
minute.
Yeah.
I mean, with the HIDA process, everything is kind of later than what we normally would do.
Right.
So, yeah, I think this was the first one we did, so thank you.
And let us know if you have questions. I mean, let the superintendent know or let the girls know.
Okay, I do have one thing, and I had to ask Deanna about this. I believe that on the 570/30 plan, the medical RX out-of-pocket is 1,000, not 1,500. And so I need you to make that change, or we need to get that change back to you. Because,
Yep,
okay, so.
my error. That one was
on-
my error.
I didn't catch it. I was supposed to approve
I'll
these.
update the spreadsheet.
So on this, could
On
you
the
say
So,
family,
yeah.
570/30. On the maximum RX out-of-pocket, it should be 1,000, not 1,500, so that's not correct. we'll need to adjust that.
Yeah,
You gonna send that to us then?
yeah, I'll send it to you. I'm sorry,
I just caught
you
it,
have
so.
no idea how many times I looked at this spreadsheet. Everything looked the same after a certain point.
Yeah, you'll change the whole number then by 500.
Around 500 off.
Yeah, by 500.
Sorry.
Yeah. Good catch. I'm glad you caught
Well,
that.
yeah.
Should be.
Oh, you know, this.
Oh, I'm there.
Yep.
Thank you.
Thanks for coming. Oh, I try so hard to make this right.
Leave this. Do you want this? It's really kind of your stuff anyway. I really don't want it back.
Oh, you're right,
It's your stuff.
it is. So we do want, maybe
Yeah.
Doug will want, share
Yeah,
with
okay.
more teachers.
That's what I was thinking. I wonder if we should fix them though.
Oh,
Except we gotta get the
oh,
1,200
that's the one.
benefit summary in there.
Coffee.
Decision-making process.
Oh, okay.
Coffee.
So,
Can you just pull that out and we'll send a new one
Yep.
on those?
Yep.
Okay, perfect.
yep,
Thank you.
so I'll email you that.
I'm in good shape.
I'll email you the lean version of the 1,200 and then the spreadsheet of this collection.
Comparison and hashing it over are
It's very difficult.
And even last year, just deciding which plans to offer, you
I
know,
know.
all over the place.
And it's hard. It is hard.
It is hard. I mean, it is nice to have the ability to offer multiple plan options, but there's, the negative of that is
Yeah.
trying to decide.
Okay, which one?
Yep.
And that got to be even.
Well, and you have to have a crystal ball to see what you think might happen.
I really believe in the HSA, you know, because
Well,
you get to keep the
that's-
money if you don't use
I
it.
know. I am on board with you.
Yeah.
I love the HSA. I just think it's
You
the
know,
best thing
one thing
ever.
we've never done here is we've never come in and sat down one-on-one with those that actually want to have a one-on-one conversation about that. Sometimes that is a more comfortable setting,
Yeah.
and you know what I mean? So that's something that Jill and I have done at a lot of schools, is we create a sign-up sheet. She takes one, I take one. We have half-hour increments.
It's really been great.
What plan are you on? What plan do you want to know more about? Do you have questions about an HSA? We can do that.
That could be valuable.
Yeah.
We
We have
have-
to see where we end up as
Yeah,
far as the
yeah.
decision-making process.
Right.
And it's not our goal to tell people what they should do. We just want to educate them
Yeah.
on,
The
you know,
options.
on what their options are. And so, I mean, a lot of people still, that HSA and the high deductible just scares them. Like you said, do they have the wherewithal to put that money aside? Well, if you do it through payroll deduction, it's there.
Yeah.
Yeah,
it's been.
but
it's tax-free.
still not for everybody.
Yeah.
And I see it, if you go a few years and don't use it, then that
You got the
snowball
nest
effect
egg
starts
there.
to kick in
It's,
where
it
it builds.
can be
Yeah.
a nice little pot of money for retirement.
Yeah, I mean, that's.
That's what I'm using it for.
Yeah. Or dental, you're right, or braces, exactly.
Very good, thank you.
Someone does have an accident.
Then you've got,
There it is.
it's the first year or even 2 years where it's a little bit the risk of
Yeah,
getting your money built up.
yeah, that first year is
Yeah.
kind of a scary year. The what ifs.
Forgot about that. Could have turned it off a while ago.
Pam, do you have?
So we got all the random wanderings going on.
Yeah, everybody's leaving. We're good now.
Well, thanks for doing that.
I get-
Yeah.
I get-
Talk to you later, Doug.